Assalamualaikum and hi, this is the presentation of AUD589, Audit of the Inventory and Warehousing Cycle. This presentation is presented by four members, Nurul Adila Izzati, Nur Nazira Husna, Nur Farah Hanim and Hayatul Akmal. Inventory is a unique account. It has close relationship with other transaction cycles such as sales and purchasing. It is a complex account and time-consuming to audit. For manufacturing and retail company, inventory is the largest account on the balance sheet. Diverse inventory items are often different for auditor to observe and value. The first transactions includes inventory account, which is to record in and out of the inventory. The assertions related to this transaction is existence, completeness, accuracy, classification, and rights and obligation. First assertion is existent. Inventory shown on the balance sheet is physically present on the balance date. The audit objective is to verify that inventory included that has been counted using tax existence on the balance date. The transactions include inventory account, manufacturing overhead account, purchase account, sales account, payable and receivable account. The internal control is proper segregation of duties and physical safeguards of inventory to prevent fictitious inventory. Use properly approved receiving reports and material requisitions for inventory transfers, and internal verification by qualified, unbiased individuals and depend on relevant documentation and records from the physical inventory count. The audit procedure on test of control is examine the transfer of inventory from one location to another, examine the pre-numbered documents for authorizing movement of inventory, observing the physical inventory count between the employees, and conduct physical inventory counts between the employees. While for substantive test is check the description and date of all recorded transfers, compare the tag numbers with the number attached to the actual inventory, and check whether the inventory actually exists. Audit evidence includes physical inventory, human resources records, traditional and system document record, inventory journal, and inventory transaction file. The possible misstatement is overstatement or understatement in inventory accounts of current assets.
Next is completeness, which all existing cash disbursement are recorded completely. The audit objective to identify whether all transactions that should be included in the journal have been included, counted, and tagged. The classes of transaction include inventory account, manufacturing overhead account, finished good account, payable account, receivable account, and purchase account. Internal control, purchase requisition, purchase order, receiving report, and voucher are pre-numbered and accounted for. Next, examine the raw material storage area to determine whether the inventory is protected from theft and any misuse. Audit procedure has two types of tests, which is test of control and substantive test. For test of control, auditor examine inventory to make sure it's tagged, and inquire account for all used and unused tag to make sure none are lost or intentionally omitted. For substantive test, account to unused tag numbers shown in the auditor documentation to make sure no tag have been added, and trace for inventory tag to the inventory listed schedule and make sure on tag are included. Audit evidence include requisition, purchase, bank reconciliation, receiving report, vendors invoice, purchase order, and perpetual inventory master file. For possible misstatement for completeness is misstatement of cash disbursement and overstatement or understatement of inventory and cost of goods sold.
Next is accuracy. So what is accuracy? Accuracy means all inventory is counted accurately or recorded counts are accurate on the text, such as units of counts, dozens, or gross. The audit objective for accuracy is to check whether the management are using the correct price to value the inventory and to obtain documentation that an adequate physical examination was made. Classes of transaction and relevant accounts are vendors invoice, manufacturing accounts, finished goods accounts, raw material perpetual to master files account, and lastly, costing inventory account. There are few internal controls that we can evaluate to ensure the accuracy of the inventory counts, such as appropriate method must be used when evaluating in accordance to accounting standards. Observe the client's counting procedures, make inquiries of client personnel about the counting procedures, and last but not least, apply the method consistently. There are two types of audit procedures. For test of control, the auditor needs to evaluate and observe the client's procedures, including the test counts of the inventory and drawing conclusion. They also need to make a verification of inventory by confirmation with the custodian. The auditor also needs to make an independent reconciliation counts with perpetual inventory master files. For substantive tests, the auditor will determine the inventory valuation method, compare physical counts with perpetual master files, and record client's counts for any subsequent testing. There are four examples of audit evidence that we can find here, such as reconciliation of documents, receiving reports, perpetual inventory master files, and cost of accounting record. The possible misstatement for accuracy are overstatement or understatement of unit cost, which may affect inventory and cost of goods sold, and also inventory is inaccurately recorded by the custodian if no supervisor are presented. Moving on to the right and obligation. The right and obligation for inventory cycles means all the inventory that is mentioned on the financial statements of the company should be under possessions of the company. The audit objective is to confirm all the inventory reported on the financial statements as at the reporting date really belongs to the company. The classes of transactions and relevant accounts are vendor's invoice, requisition account, purchase account, costing inventory account, and lastly, payable account. The internal control of right and obligation is recorded inventories is supported by suppliers' invoices and goods received notes. There are two types of audit procedures, such as test of control and substantive tests. For test of control, the auditor need to check recorded inventories against suppliers' invoices and goods received notes. For substantive tests, the auditors inquire as to consignment or customer inventories included on client premises. They need to be alert for inventory that is set aside or specially marked as indication of non-ownership. There are five audit evidence, such as vendor's invoice, good receipt reports, perpetual inventory master files, cost of accounting record, and lastly, supplier's invoice. The possible misstatement for right and obligation is overstatements or understatements of inventory and cost of goods sold.
Next is classification. Classification means that all inventories are correctly classified on the tag. The audit objectives is to ensure that the inventory items are properly classified and presented in the financial statements in accordance with accounting standards and company's policies. The classes of transaction and relevant account includes cost of goods sold, sales return, inventory bookkeeping, and account payables. The internal control includes segregation of duties between those who initiate inventory transactions, approve them, and record them in the accounting system. The inventory management systems to ensure proper classification and accurately track inventory items. And lastly, regular review and reconciliation of inventory records. Audit procedure includes test of control and substantive tests. In the test of control, it is to test whether there is segregation of duties between employees and whether there are controls in place to prevent manual errors in inventory classification. In the substantive test, it is to investigate any inaccuracies or errors in the classification of inventory transactions, and it is to inspect the inventory records to ensure that inventory items are classified correctly in the system. The audit evidence includes inventory journal, supplier invoice, inventory transaction file, and analytical review documentation. The possible misstatement includes misclassification of inventory items which may lead to misstatement of inventory balances and financial statements, and omission or overstatement of items in the appropriate classification may result in under or overstatement of inventory values.
The second transaction related to the inventory and warehousing cycles is purchase account. It is to record the amount of raw material being purchased. The section related to this transaction are existence, accuracy, completeness, right and obligation, and lastly, cut off. First of all, we will start with existence. It is to ensure that all recorded purchases are genuine and all the goods or services were indeed received by the company. The audit objective is to verify that all recorded purchasing transactions actually occurred and pertain to the entity. There are five classes of transaction and relevant accounts, such as purchase account, purchase return, payable account, inventory account, and lastly, supplier invoices. There are two internal controls that we can find here, such as to ensure that all purchase orders are approved by an authorized individual before processing, and to ensure that supplier invoices are matched with purchase orders and receiving report before payment is made. There are two types of audit procedures, such as test of control and substantive tests. For test of control, the auditor needs to observe the process for receiving goods and recording purchases. They also need to inspect purchase order and receive report to ensure they are authorized. For substantive tests, the auditor needs to select a sample of recorded purchases and watch them to supporting documents to confirm they occurred. They also need to confirm purchases directly with suppliers to verify transactions. There are five audit evidence, such as purchase orders, receiving reports, suppliers' invoices, inspection records, and payment records. The possible misstatement that related to these assertions is recording purchases that never occurred to inflate expenses or liabilities, and recording the same purchases more than once. The next one is accuracy. Accuracy ensures that the purchase order, invoices, and payment amounts are accurate and properly recorded in the accounting system. The audit objective is to verify that the amounts and other data related to purchasing transaction have been recorded correctly. There are four classes of transaction and relevant account, such as purchase account, inventory account, discount received, and payable account. The internal control related to accuracy are require review and approval of invoices by the accounts payable department before recording and payment. Next is to use automated purchasing and invoicing systems to minimize manual errors. For audit procedures, there are two tests that we need to conduct, such as test of control and substantive tests. For test of control, the auditor need to inspect data entry validation controls to ensure they are functioning, and they also need to reperform the calculation of purchase transaction to verify the accuracy. Next, for substantive tests, the auditor need to recalculate the amounts on supplier invoices and match them to purchase orders and receiving reports. They also need to test a sample of purchase transaction to verify the accuracy of recorded amounts. There are four audit evidence that we found here, such as suppliers' invoices, recalculation of invoices, comparison documents, and also price lists. The possible misstatement related to the accuracy are recording purchase transaction at incorrect amounts, either due to errors or intentional misstatement, miscalculation of quantities, price, or discounts, and last but not least, incorrectly recording payment terms, leading to errors in discount recognition or interest expense.
Moving on to completeness, which means that all purchases made during the accounting period are recorded in the purchase account, leaving no material transactions unrecorded. The audit objectives is to ensure that all purchases of inventory and warehousing related items are recorded in the account. The classes of transaction and relevant account includes purchase account, payable account, inventory account, and supplier invoices. The internal control is to ensure that all purchases are initiated through a proper process with appropriate authorization and documentation. It is also to ensure that all goods received are properly documented and matched to corresponding purchase orders, and to ensure that all invoices are accurately recorded. In the test of control for audit procedure, it is to examine purchase orders to verify that the items have been properly authorized and recorded, and to verify if receiving reports are properly matched with corresponding purchase orders. In the substantive test, it is to investigate any inconsistencies between recorded purchases and supporting documentation. Audit evidence includes supplier invoices, reconciliation reports, and analytical review. The possible misstatement includes overstatement or understatement of purchases, which affects inventory and cost of goods sold, omission of accounts payables related to unrecorded purchases, which may result in understatement of liabilities, and mistakes in recording purchases transactions may lead to inaccuracies in the purchase account. The rights and obligations is to ensure that the company has legal rights to the purchased item. The audit objectives is to ensure that the company has legal ownership to the purchased goods and that any associated liabilities are properly recognized. The classes of transaction and relevant account includes purchase account, account payable, and supplier invoices. The internal control is to ensure that the contract with suppliers specify the rights and obligation, and is to ensure that the goods are properly inspected upon receipt to confirm they meet contractual obligations. The audit procedure for test of control is to ensure that the supplier's contract specify the rights and obligations of both parties, and to ensure that the liabilities are properly recognized and recorded when the goods are received. The substantive test is to engage legal counsel or internal legal experts to review a sample of vendor contracts for compliance with rights and obligations. The audit evidence includes supply contracts and agreements, account payables, receiving reports of goods received, and the possible misstatement includes misstatement of account payable related to goods received, purchases may not comply with contractual items, leading to potential legal issues or disputes, and failure to record obligations arising from contractual agreements with vendors. Last but not least is cut-off, which is to determine whether the transaction have been recorded in the appropriate accounting period. The audit objectives is to ensure that the purchases are recorded in the correct accounting period, matching the timing of when the goods were received or rendered. The classes of transaction and relevant account includes purchase account, inventory account, account payable, and cash or bank account. The internal control is to ensure that the purchased items are date stamped upon issuance and the goods received match the order, and it is to ensure that the cut-off procedures are performed accurately and timely at the end of each accounting period. Procedure for test of control is to test whether there are controls in place to ensure that the purchase orders are date stamped upon issuance, and to assess whether there are controls to ensure that receiving reports accurately reflect the timing of goods received. The substantive test is to confirm with suppliers the dates of shipments and invoicing for selected transactions around the period end date. Audit evidence include cost of accounting period and perpetual inventory master file. The possible misstatement includes incorrect cut-off procedures may result in purchases being recorded in the wrong period. Failure to record purchases in the correct period may result in understatement of expenses and inventory balances. And the late recording of goods purchased may lead to delayed recognition of expenses and misstatement of financial statement.
The third transactions include credited account, which is to record the invoice from vendor. The exceptions related is existence, completeness, accuracy, rights and obligation, and cut-off. First is existence. Recorded inventory and related creditor liabilities exist. The audit objective is to examine the inventory items in person to confirm their existence and make sure the quantity are as stated. Transactions include inventory and payable account. The internal control is regular physical inventory counts and verification of received goods against purchase orders and invoices. The audit procedure on test of control is observe the physical inventory count and review the process for matching receiving reports with purchase orders and vendor invoices, while for substantive test is examine a selection of physical inventory items and link them to the accounting documents, confirm vendor balances by communicating directly with suppliers. Audit evidence includes inventory count sheets, receiving reports, purchase orders and vendor invoices, and supply confirmation. The possible misstatement is overstatement of inventory and creditors due to recording non-existent inventory. Next assertion is completeness. All inventory received and related creditor liabilities are recorded. The audit objective is to make sure all items are documented, reconcile receiving reports with vendor invoices and inventory records. Transactions includes inventory and payable account. The internal control is sequential numbering of receiving reports and purchase orders, and regular reconciliation of receiving reports to inventory records and account payable. The audit procedure on test of control is review reconciliations performed by the company and inspect a sample of receiving reports for proper sequence, while for substantive test is trace a sample of receiving reports to inventory records and vendor invoices and review subsequent payments to verify all liabilities are recorded. Audit evidence includes receiving reports, inventory records, and payment records. The possible misstatement is understatement of inventory and liabilities due to unrecorded receipts.
Next is accuracy, which is inventory quantities and creditor liabilities are accurately recorded. For audit objective, to verify calculation on vendor invoice, check unit costs, and ensure that they are correctly applied to inventory record, and match quantities on invoice to receiving reports and inventory recorded. Class of transaction include inventory account payable, and purchase return and allowance. For internal control, to verify of invoice accuracy by matching the purchase orders and receiving reports, and approval process for invoice before recording. Next, audit procedure. For test of control, audit inspect a sample of invoice for evidence of matching and approval, and review the process for checking calculation and unit price. For substantive test, recalculate invoice amount for a sample of transaction and compare unit cost of invoice to purchase order and receiving report. For audit evidence include purchase order, Windows invoice, and receiving reports. Possible misstatement for accuracy is error in the recorded amount due to incorrect calculation of unit price. Next is right and obligation, which the company has legal right to the recorded inventory, and recorded liabilities represent actual obligation. For the audit objective, to review purchase agreement, contract, and consignment arrangement to verify the company right to inventory, and to confirm that recorded liability are actual obligation by reviewing supporting document and confirmation from vendor. For internal control, include documented purchase agreement and consignment arrangement, and review of contract and agreement by management. Classes of transaction include inventory account payable, and purchase return and allowance. Next, audit procedure. For test of control, auditor need to inspect a sample of purchase agreement and consignment record, and review the process for contract approval and recording. For substantive test, auditor need to review legal document to verify ownership rights and obligation, and confirm vendor balance with suppliers. Audit evidence include purchase agreement, consignment record, and supplier confirmation. For possible misstatement, recording inventory not owned by the company or liability that do not exist. For the last accession is cut off, will determine whether the transaction are recorded in the correct accounting period. Audit objective to examine the sample of inventory receipt and vendor invoice around the year end to ensure that they are recorded in the correct period, and to verify that inventory received before year end include in the inventory record and the corresponding liability is recorded. Classes of transaction include inventory account payable, and cost of goods sold. Internal control include procedure to ensure timely recorded of inventory and invoice, and review the procedure for period and cut off. Next, audit procedure. For test of control, auditor verify that there are established procedure for ensuring proper cut off at the end of the period, and check documentation for cut off to review any adjustment made to ensure proper period and cut off. For substantive test, auditor examine a sample of inventory receipt and vendor invoice around the period and date, and verify that transactions are recorded in the correct period. Audit evidence include vendor invoice, period and receiving reports, cut-off documentation. Last but not least, possible misstatement, which misstatement of inventory and liability due to improper cut-off.